Adam has joined us, guys. Hello, Adam Button. How are you, buddy?
Hi, Dale. Good to be here. Hello, everyone. Yo, hey.
Hi.
How
Hi
are you?
guys.
Hi, Adam.
Okay, so Adam, we got a pretty strong headline number, but the some of the numbers underneath, wages, etc., were not so great, and dollar bounced initially on this. We finally had at least some short covering in euro. Where's your head at on the dollar after this number?
Yeah, it's a great battle. I mean, the Fed's going to look at it and think, the jobs were so strong that it probably means the wage growth is coming later. Now, before the report came out, Ian Shepherdson, who's a really good economist on Wall Street, one of the best, he was saying February wage growth tends to be weak. There's a quirk in the calendar. It comes out soft, so maybe we can ignore it. Maybe the Fed will know that, maybe they don't. And they want to see this inflation coming, so I think they're going to see it anyway. And the other big story in February was, well, is the economy struggling? We had this rough start to January. Well, you can't really see it as struggling, given 242,000 jobs. It's an amazing month. So, the wage growth might temper something like dollar yen or some of the dollar moves, but I think ultimately this is pretty good news for the dollar.
Okay, and also the S&Ps are taking it well. I know seasonally you said that crude, February was a good month for crude, and it had a decent month. It held, it advanced, it grinded up. I also remember you put me on the spot at our last interview and said, Dale, you were bearish the S&Ps all last year. What do you think now? And I said, I think we're going to put in a low, and that was, I think, the day before the low, and there'll be better shorting opportunities in April. What's your take on this recovery in the S&Ps now that we're 61.8 back? Are you in the camp that this is going to be a failing rally in the market, or is there now a chance for new highs?
I'm curious to see what happens today. I mean, the technical break is nice, right? There's a little bit of a double top in February, busted through. It's got some momentum. Last 2 days, it looked like we were going to turn lower, and we finished on the highs. I hate to fight a market that's finishing on the highs or near the highs. And today, this is a pretty good number. I mean, if you like good growth, plus not having to worry as much about Fed hikes, if you get strong data today and strong wages, then you start to get a little bit jittery about a hawkish Fed. You should still be worried about it, but I don't think you'll be worried as much. So this is a perfect report for stocks. Maybe we get back up, 2000, 2020, and then it's time to start worrying because the 2050 level has been tough. But it looks good in the stock market. That's good for dollar yen, and the idea before was that we're too worried about commodity importers, right? At the U.S., even China to that extent, or commodity exporters are the ones that can meet, especially developed market commodity exporters. And I think the U.S. is going to be just fine, and we're seeing that in the numbers.
Kudos on the last interview, Adam. You said just go with the flow, buy gold. Just go with the gold, and gold has continued to move. Do you think we're getting close to where this portion of the gold rally might be terminating? We had a $230 rally off the lows. I'm starting to see some divergences develop in the gold. And if you're positive the dollar, my thoughts are if the Dixie can generate a new high above par, that might be the catalyst to take gold back down, some type of fib retracement of this rally. What's your take on that? And then the second part of the question was, you also said just go with the flow, short U.S. dollar yen. I gather from your last comment that that may have changed. I know a lot of people want to short the yen at the breakdown, that very obvious line at 116. I've learned that when everyone wants to do something at one price level, it either doesn't get there or it blows through it like a hot knife in butter. So if you could comment on the dollar, gold, and U.S. dollar yen.
Yeah, I was writing about the dollar yen at the end of February, and it dipped on the last day of the month, and there were some flows there, and it was a great spot to buy. I think it was down around 112, and the Bank of Japan just won't let it happen. It won't let it get down 111 seemed to be their line in the sand. They're ready to ease. Kuroda said yesterday they're ready to ease. The numbers out of Japan have been dismal as always. And so they just won't tolerate it. I do like the long side of that. You asked about gold. Though everyone was watching the wedge, right? That it was such a clear technical consolidation pattern in gold after the move down, the move up and the consolidation and the break. Now you hate to see a break out the day before non-farm payrolls because you can get whips on it so easily. It's usually a thinner market. And it would be interesting to see what's on non-farm payrolls, but it's come all the way back now. That's a good sign. If gold can finish flat or even down a few dollars today, that's probably a good signal for now. And I am cautious because the dollar strength might come. The Fed will probably be a bit more cautious. So I don't really see the urgency to chase gold, but if you just look at that pattern alone, it points to 1350. So
13.5. Okay.
I don't like to short it just yet. And it's probably the momentum trade is in force. Another $30, $80 in gold is not that big a deal, especially once the gold bulls start to get excited. But it's not a trade I love right now.
Okay. I learned when I was your age from a legend named Larry Williams. Have you heard of Larry Williams? He was famous for his book, How I Turned $10,000 into $1 Million. That's the beginning of trading contests. And Larry Williams said that stock market rallies are truer and healthier when it's happening with gold going sideways or down. And gold has actually been outperforming the market. So that kind of flies in the face of this equity rally. He used the metaphor that as gold rises, it's like a patient in the hospital whose temperature is rising. So have you ever seen this before where you've had a big bull move in gold and a rising equity market, and what do you think that portends?
Yeah, I think it's just that the fact was dovish and the dollar wasn't as strong. We had in 2009, 10, a huge rally in gold and stocks in the latter half of 2009. And it is about the Fed in that sense. And I don't know if I draw too many conclusions from both of them going up together. But the story is commodities. Gold's commodity. But not in the same sense that oil and industrial metals are. They're not commodities that are used up and expanded. And the story of 2016 is the commodity bust. Now we're in this bounce phase, right? Everybody's feeling better about everything. Oil's at up another 36 cents today, right at 35. I mean, a lot of the exporters will be fine at 35. Companies will be fine. So when we get this next flush down in oil, everything's going to go out again. So I think
okay,
we'll probably
you're looking for that. So I know a lot of people are saying this is just a bear market rally unless crude takes out 38. That's kind of the bear's line in the sand. And afterwards, there are a lot of numbers sub 20 handle. Are you in that camp, buddy?
Yeah, exactly. That's what we were saying at last time we spoke, Dale. I was talking about it wasn't a good time to be bearish of crude, and it's playing out very well right now. 38 is the level I'm looking for. I mean, we had weekly inventory data, another 10 million barrels into storage in the U.S. Nobody's stopping pumping at 35 here. You see CapEx numbers are coming down, but that's not going to change anything in 2016.
Yeah, well, that's bad news. That's bad news for the Clampetts of the Beverly Hillbillies, because that means Jed and Jethro and Ellie Mae are going to have to move from Beverly Hills to Watts. So I'm gonna wrap it with that. But just a comment, that was a decent call for recovery in the S&Ps on our last interview, wasn't it, buddy?
Yeah, it was. I mean, it was overdone. There was so much fear out there, and right now, the dollar is coming off here a little bit too. So that wage growth number is starting to weigh, and we're almost back to where we were before the report. So interesting start to the day, and stocks I think could probably do pretty well here, especially if the dollar comes on.
Okay, Adam, I'd like you to come back in April to LAR. I'm going to be wrapping it up. Val, great seeing you and talking to you. I'd like to have you come back to LAR when you have some time. And Yohei, keep up the great work that